our real estate tip of the week. And today's tip of the week is avoiding analysis paralysis. Now, Azad, tell everybody a little bit on analysis paralysis.
Yeah, so we find this a little funny. Hopefully we don't offend anybody out there. We actually get people that do their own analysis. We give them every property we buy, we run our properties through our own analysis, and we account for things like vacancy and maintenance and whatnot. But what we find lately is people are really over analyzing, and it really comes down to Tim, some of the engineers out there. And we know we wanted to discuss this because just last weekend we had a young guy, Ryan Day. He works for Calvert Mortgage. They're Tim, they're a hard money lender, basically. And Ryan's been investing with us for, Tim, maybe 4 years now.
Oh yeah, he bought his first investment property. It was a half duplex in Capitol Hill. He's probably made 100 grand on that thing. But anyways, he did start investing a while back, and he really wants to accumulate more properties.
And so it's been like the third or fourth client now that's given us their numbers. And yes, you have to run your numbers and you have to run what the interest rates are doing. But some people are factoring in too much when they're buying with us. We aim for zero vacancy. So some people, Tim, are factoring 1 month vacancy. We are buying properties. We don't even know when our clients' properties were vacant last. And if they are vacant, they're determining when it is vacant. And what we mean by that, they're scheduling either painting or flooring or just small renovations. So they're deliberately making the property vacant. The properties we're buying, we know this for a fact, people are getting lineups of tenants wanting to rent. Like it's off the chart where people have to turn their phones off. So over analyzing, what we want to stress out there, it could really hurt you from taking action. And so how we handle this, and Danielle was on the mortgage side, and this is why you have to work with a good team. Tim and I stepped in, and we do this with all of our clients. Every property we're buying, we 100% guarantee that it's going to work. And if it doesn't work, we're there to step in and either do a joint venture or buy the property. And in this case, we actually said to Ryan, he was off on holidays, Tim. I think he was in Europe somewhere.
Yeah.
While he was buying this property, he trusted us with the whole process of buying it. And we stepped in and said, look, Ryan, this property, there's too much upside, even with interest rates going up, there's too much upside to walk away from this property. So Tim and I will step in and joint venture with you and buy it and take over the management. So you're 100% ready to take action and have no fear. So you need to work with agents that understand the investment game and understand the numbers. And some of the other things, Tim, he had in there, he had a management fee, which, yes, you can have a manager, but if you're buying a property in your city, you should be managing the property yourself. We train our investors how to do the property management piece successfully and make it easy. And so we ruled out a couple of things with Ryan's purchase. We said, we'll take away the management fee. We don't believe there'll be any vacancy. So, and not only that, he was doing mortgage plus improvements on this property, Tim, to make the property legal.
Yeah, and he was doing a few more maintenance things so that there wouldn't be any maintenance for at least a couple of years down the road. So, you know, the maintenance was already factored into the mortgage payment. So to put it in your analysis, that's fine. You can put it in your budget, but realistically, you're probably not going to have, you know, a whole lot of maintenance crop up if you're doing it all ahead of the time. Also, he factored in a fixed rate payment on his mortgage. And when he talked to Danielle, Danielle had a lower monthly payment when he did a variable rate. So switching to a variable rate dropped his payment by about $100 a month. And that helped with his cash flow there.
Yeah, so Tim and I and Danielle in this case, we all stepped in and said, you know what, there's no way we can let you walk away from this property. The upside, and I'll just quickly tell you the upside on this property, he could turn this half duplex into a legal half duplex. Tim, it's going to generate roughly $2,900 in rent. It comes with, we calculated $2,900 in rent. It comes with a double car garage. He's got an option to rent that separately. And then later on, he could buy the other half and turn it into a fourplex. The lot itself was a flat lot that you could knock down and build townhouses. You could build another fourplex. It's walking distance to the new C train, shopping. And we know Ogden, Tim, the price we got this property for at $370,000. We believe within a year, it should be worth, once legal, roughly $430,000. So the upside was too big to walk away. And if he was going to walk away, we were going to jump in and help him. So yeah. I guess understanding that this week's investment tip of the week is don't overanalyze, because you're killing yourself. Like you have to work with people that help you understand what the property is going to do, and then be with you to support you every step of the way.
Yeah, so that's our real estate tip of the week for this week. For those of you that don't know, we do these every seminar so that we can post them up on our Crew TV channel, and anybody can go on there. They're all free to the public, and you can check out all these tips of the week. And, you know, we cover subjects that are relevant to today's market. So, you know, if you have a tenant issue, or in this case, you're analyzing too much, you can go on there and we can explain, you know, to you why, you know, we have these tips and how they can help your business, how they can help your real estate investment business.